Hello, guys, and welcome to another episode of DeFi Talks. I'm Sharif, and this is my co host, Jake.
Hey guys, I'm Jake, and I'm really excited to talk about stablecoins with you today.
That's going to be our topic today. Stable coins, we need them. We hear a lot about them. Every exchange seems to has one. So, we wanted to go over what they are, why they exist, and why we really need them in today's market and in the world of technology. Um, but before we do that, let me go into just a few questions that I want to ask you, Jake, as a person who uses crypto and who has experience with this. What is a stable coin to you?
Yeah, so stablecoins are essentially it's like a crypto digital cash. So it's always going to be attached to a dollar figure. All the stablecoins die. USDC, USDT, you'll always see them theoretically and hopefully at a number $1 figure, and it's usually trying to follow like the US dollar. But also, what's interesting about them is they're supposedly backed by something that gives you the confidence to buy that stable coin that acts as again a digital dollar, digital cash. For example, US Tether has U.S. government bonds. USDC was created with another bank called Circle, and they created a security agency called Center, sort of like a governing body that regulates it, and they do audits. Um, I'm not sure what it's backed by, but it has a maker DAO behind it. I'm sure there's some sort of mechanism that gives people confidence. And so you want to use that as your cash, right? It's kind of like, an investor has cash reserves, and then they use that cash to buy investments or do things with. And so it essentially is like your sort of home base of um, your funds in crypto, just no different than actual cash. I'm sure you use it in simple ways just like that, Sharif, sending money, paying things. It's kind of just like your foundation of your profile, your investment profile in crypto. Is that how you kind of
So
see it?
definitely, I was first exposed to stable coins when I started using Coinbase to take payments for one of the businesses that I manage. Um, that was my first encounter with it. At the beginning, I kind of liked the idea because, well, there's just USDC and I can transfer it easily. I can move it around. There's no need to actually hold anything physical, so it's less weight. It's less difficult to like trade for other things. Now it's kind of hard to use it for real life things like paying rent or buying groceries, but there are a couple of companies that have come up with solutions for that. One of them being, I think, Echo, where they let you use USDC to pay for your groceries and stuff. They give you like a debit card and you can charge that up with USDC. So the idea is that by making this digital asset that is pegged to the dollar, that is equal in price to the dollar, we can do a lot of things that are traditionally more difficult and time consuming, like fulfilling transactions or storing money or transporting money overseas when you're traveling. This all can be solved pretty quickly by the fact that you can just buy this digital asset and you know that tomorrow it's going to be worth the same thing that it's worth today. And following that logic, you are able to easily invest and move your money around in crypto through stable coins. Um, that's what I've used it for in the past and what I use it for right now. That's why that's the value that I see in it. I'm sure that different people have used it for different things. And I do hope that we get more use cases out of it. But for now, it seems to be a bit limited. Don't you agree?
Yeah, that's the interesting thing about it is it plays that vital role in the crypto marketplace. Again, no different than cash, where if you want to make a transfer or pay somebody something, say you owe them $1,000 in general, if you paid them in Bitcoin or any sort of actual token or crypto that fluctuates in value, then you might send them $1,000 in Bitcoin, and then it's not worth the same later on. So you need to do that in stable coins. And then also another move that a relationship with stable coins is if you make an investment you, after you've experienced some gains, that's exactly what you want to do, is either sell or swap for a stable coin. So you've essentially locked in your gains, and then you can make another decision on what you want to do later. But as to answer your question, Sharif, in terms of actually using them in real world, yeah, absolutely. It's basically in my life, I really only use them within the crypto ecosystem. I have money that goes in, then stable coins get moved around. I don't really, as you know, I have a still a regular corporate type of job, so I still make income in fiat, and so I don't do a lot of the, like, needing to use stable coins to buy exchange for stable coins for fiat as much as some people do. Like, I know you have that going on quite a bit for yourself. So yeah, but it definitely is limited. I don't even know a whole lot of ways except for like PayPal, getting, going from Coinbase to PayPal, because I don't have to use it a lot. But yeah, I know it's super limited. I'm waiting for more and more. I think there's a lot of opportunity if like credit cards or anything at all would allow you to just pay more in stablecoin, connect a Coinbase wallet or something, MetaMask wallet, pay in stable. I'm sure people would use it. What do you think about that?
I believe that stable coins in general are like the easiest way into mass adoption for crypto and for any kind of blockchain technology, because it's simple enough that anybody can get it, and it allows for us to do so much more in a much more efficient way. But that's all predicated on whether or not the company that is running the stable coin is centralized or decentralized, whether it's pegging it to the right thing, whether they're telling the truth when they say they're pegging it to the dollar. Like, you can, so I've heard this criticism a lot in terms of what different companies are able to do to get around some of the requirements for this to actually work. Like, for example, some companies will hold stocks, bonds, stuff like that, which are a bit risky and are liable to fluctuation. And then they'll peg a stable coin to that. And in that case, like, if the market moves too much and you are not sufficiently prepared for things that could happen, like, say, war or COVID or whatever, then the stable coin can go out of whack, and then it's not actually worth a dollar, and then that causes panic, and it kind of destabilizes the whole crypto economy. Or if, say, a company actually says it's pegging it to the dollar, like they're locking up $1 for each one USD, whatever that they're making or minting. If they don't actually store dollar for dollar what they're minting, then that can also create an imbalance between how much stable coins there are and what the actual value behind them is. So all of these things need to be taken into consideration, and there needs to be some sort of regulation and some sort of like open source ability for people to go and audit and see, like, all right, are you actually telling the truth when you say you're storing this money? Are you actually telling the truth when you say this is a safe algorithm that you've deployed to make this work? Or are you just like printing money, which is essentially what the government does sometimes? So I know that was a long-winded answer, but to say, like, I think it's limited, not because of what we can or can't buy with it. It's limited because we can't really trust the companies behind them yet. But that is about to change, in my opinion. Don't you think so?
Yeah, I think more and more adoption of stablecoins needs to happen. You're going to see more popularity in general, just because it's needed. Again, it's the foundation of your crypto pyramid or your wealth pyramid in general. Theoretically, again, you need cash, always cash on hand, or the movement of cash, or going in and out of cash. Whenever you sell a security, you're always going to sell it back to US dollar cash. Typical like stock or investing world now. And so we just have the next wave of that in Web3. But yeah, and I want to really talk about a lot of what you said about the backing and sort of like the confidence model of a stable coin. They always, like you said, it always needs to be backed by something, whether it's US government bonds like US Tether, USDT. And that's kind of why there's a lot of skepticism around them, is because there was an audit and there was a lot of money moved around, and bank accounts looked like they were recently opened, like they were created just in time for this audit. And there was a lot of questions, and then a lot of like attachments to other organizations around the founding of Tether. And so that's why oftentimes I find the group us locally, and then even online, you hear people kind of have an asterisk around Tether. Like, we don't fully trust it. USDC seems to have much more confidence. Again, it was created by another bank called Circle, and they created this governing body called Center. It's kind of why, and they do more regular audits, things like that. And then I think we should talk about Luna and the Terra ecosystem. What's going on today, and
So
how?
to be honest with you, I'm like really, really zeroed in on Ethereum and the like layer twos.
Yeah,
Layer twos being like Polygon, Optimism, stuff like that. I'm not really into Luna and whatever's going on that end. But seeing today that UST lost 67% of its value is just mind numbing, because that's a lot of money if you look at the like market cap of this currency. You would see 6-7% is a lot of money. Where did that money go? How did it disappear? And when you start to look into it, you realize that a lot of the losses that they're currently going through come from not sufficiently planning ahead, not taking the right precautions, and also pegging their stable coin on something that is very, very unstable. So you can't take a market, like you can't rely on Bitcoin to keep going up or to maintain a certain price for your stable coin to function, because then it's not really a stable coin. Then it's backed by this speculative asset that is always going up and down 20, 30, 40, 50%. So what you're seeing now is just the bad decisions of a bunch of companies just playing out on the global market. And it's kind of concerning, in my opinion. I think that this could cause a lot of issues for future development of similar products. It could cause a lot of issues for mass adoption of these products. It could cause us to start putting down limitations and senseless like policy around how you can make a coin or how you can sell it or spend it or what it is. So I'm very concerned because of all the stuff that's been happening recently. And I'm concerned as a user of these things, not necessarily as somebody who understands them completely on a market and economic level. So I would like to let you like give you the floor. You can talk about what exactly is going on the corporate side, what's going on, what is Luna, what is Tether, what's going on really. I think you can really clarify this for people.
yeah. So everything you said was true, and this stablecoin project UST and what Terra, Do Kwon, and the whole gang have been up to, it really is unique, and a lot of people have warned about it, and like you said, created something that has a stablecoin element within it, but it's not so stable. So let's back up. And I should also want to say that I'm not the Luna expert. I do have some UST, and I was staking in their protocol Anchor for the 19%. A lot of people in DeFi and crypto are aware of that. It's like one of the higher returns that you can get nowadays. But definitely not a Luna expert, have not been involved and know everything. And also, probably we'll miss a few things, but let's go back and talk about the full timeline of what happened. So you have this Terra Luna project. The token is called Luna. That's run by this guy named Do Kwon, that has really ripped out of nowhere in the last year and gone from single digit dollars to like $200 peak last fall. A lot of confidence around the project, really building as one of the top now layer ones with Avalanche and Solana and Cardano. So everybody's watching Luna, and it got up to number 7 in market cap, 7th biggest crypto project lately. And it's been one of the ones that more and more people are talking about, even in this sort of weird spring 2022 ecosystem. So everybody's talking about Luna. It's going crazy. And so along the way, I think, far more than a year ago, they minted their own stablecoin, okay, called UST. Not to be confused by USDT Tether, but at the UST Terra stablecoin. And what they did was they created an algorithmic stablecoin. It's not actually a normal stablecoin just attached to a dollar figure, which has some sort of security. This algorithmic stablecoin, how it works is when you buy a UST, like you switch from whatever asset to buy a $1 UST Terra stablecoin, you essentially a Luna token is burned, and at any given time you can switch out the value for just $1 in Luna or some other
Just a
asset.
second, because that's a term that a lot of people get confused with. What is burning?
Yeah, so the burning is done in lots of different reasons, but I'm pretty sure, and you can validate this, it's sent to a wallet that is unrecoverable and it's taken out of circulation from that token ecosystem.
Yeah, you're right. So like let's say there was an imbalance between the amount of UST that's been minted and the amount of money that is backing it or that it's pegged by. So in order to balance it out again, what Terra will do is they'll basically destroy funds that haven't moved in a very long time, or that have been sent to an unrecoverable wallet, or that have been like put up as collateral for a loan that hasn't been paid back. So the idea is, by destroying some of the circulating currency, you get to restabilize the price of the coin, and that would hopefully help you deal with the small ups and downs of the market. But just so everybody knows what that is. I'm sorry to interrupt you, Jake. Can you go back?
Well, you're good. And so what you do when you buy $1 of UST, one UST, then $1 of the Luna value is burned, and like Sharif said, they're creating some sort of balance here. But this isn't really like you're buying a gold or a U.S. government bond or something else. It's not. You're not really. It's not quite the same. You're not. Like, what would happen theoretically if the price of Luna really went down? Well, then how would you cash back out your UST? So theoretically, from the jump, there's a little bit of a threat. But because Luna was such a successful project, the market cap was so big, and at no given time was the market cap of all UST even close to the total market cap of Luna. So people never really questioned it, right? And it was fine. And here we are until lately that what was going on this spring is Do Kwon said, all right, well, okay, you guys still, just in case you get concerned or what if Luna does drop, here's what we're going to do. We're going to create this thing called the Luna Foundation Guard, and we're going to buy a whole bunch of Bitcoin. Theoretically, he talked about publicly buying $10 billion worth of Bitcoin over a long duration, and already has, I think 1.5 or up to 3. I can't remember what the exact amount is, but several $1 billion worth of Bitcoin even today. And so technically what this guy's doing is they're using their Luna tokens of the project to then buy Bitcoin, right? So they're having people buy this stable coin, and there are all these projects that are offering incentives to own the stable coin. So people want USD, people buy Luna, they buy both, the stable coin, the governance token. Everybody's making money. They're staking it. The token's going up. And so Do Kwon, what they're doing is they're using their own Luna token when it's really, really high in value to then say, okay, we're going to create this Luna Foundation Guard, buy Bitcoin, right? With everybody's money that they pumped in the project, we're going to buy this harder asset Bitcoin to back it. And ideally, all of this is working out. Now, what's going on lately is Luna has dropped massively in price because of a lot of threats to the ecosystem. People have been selling UST over the weekend. Huge amounts of UST were sold, like several issues of $100 million sales happened, and Anchor dropped, Luna dropped, and now the market caps of UST, the market cap of UST is above what all of Luna is. So theoretically, there's no way that you can just cash out your stable coin, right? And so the whole thing, that's why there's this depegging. And because what the depegging really is that other exchanges will not give you $1 for your UST. They don't see it as the same price. And so there's just big threat. And then the Luna Foundation Guard stepped up, and they're like, all right, well, we're going to try to bolster things up. We're going to sell Bitcoin. They've been selling a bunch of Bitcoin. I think it was 1.5 billion in Bitcoin they announced today. So the whole thing is out of control. Bitcoin's down 19% now, 31,000 today. It's incredible. Luna's down 48% right now. I'm looking at it. Crazy.
Someone called this, there's a YouTuber called CoffeeZilla, and he called this about 10 months ago. that this is going to happen. So I think people kind of had a feeling that there was something wrong with this whole idea and this whole algorithm, but nobody really knew what they could do about it, or nobody really knew for sure that this was going to happen. And so nobody really took action because we tend to delay action until it's too late. Now you see that the coin lost 6% of its value. Bitcoin is dropping. Luna's probably dropping. This is creating a lot of problems. So this has been a pretty negative podcast episode, but just to go back a little bit and probably bring it back to a more positive space. This is not what's going to happen to every stable coin or to every currency or to every project. This is just what happens when people make too many mistakes, and hopefully they can go back and fix some of these mistakes, and with time they can improve their infrastructure and build something better, because the world needs these products. It is really hard to move money around internationally, like a significant amount. Say if you're, I have a dual nationality. I have two nationalities, so I can live in two different places legally. When I want to move around between them, there's a limitation to how much cash I can hold with me. And if I need to like go somewhere to live somewhere for a while, then I can't move too much money, and it becomes a problem. Sometimes my bank says that like it'll take 5 days for a transaction to clear, when myself or somebody else needs the money in 2 days or in 1 day or immediately. So all these limitations and all these issues that caused stable coins to be created in the first place, they're not going away. The need for these things is going to stay for a very long time. It's just really about perfecting the algorithm, making sure that you think ahead. And thinking ahead isn't just a week or two. It's not just a month. It's not just a year. Thinking ahead means like building the right infrastructure, setting up the right, like, what's it called? Like just testing and monitoring and improving and working on things little by little and constantly improving and never being satisfied with what you have. That's what thinking ahead looks like. And I feel like some projects really do that well, despite like DAI has a little bit of there's a little bit of fluctuation with the price of DAI, but due to the fact that it's a decentralized stable coin, like that makes it much more trustworthy in my opinion, because anybody can just go and look at the code and understand what's going on. And
How does DAI work? I actually don't know how MakerDAO's DAI even. Can you explain that?
I would have to read a little bit more about it. I know that it's a decentralized stable coin. So basically, no company actually controls how it's going to be done. And it's backed by a couple of things instead of one thing. So it's backed by gold, USD. It's backed by consumer items. So it's a lot more well developed, in my opinion. In order to give you more information, I would really need to like read more about it. But just the fact that it is made to be decentralized instead of being a centralized asset makes me happy, because that's one of the main goals in crypto. Like you need to decentralize the control of these assets. You need to decentralize how people can make them, how people can sell them, because if you control that too much, then some people are going to suffer. And we've seen this time and time again. If you don't have a good bank in your area, you're probably going to lose a lot of money. You're not going to be able to buy a house. If you have bad credit, the same applies. So stable coins, especially ones that are trying to be decentralized, are a good solution to this problem. And it's a good like bet to have. Like I would bet on that. I would bet on USDC because I've been working with it for a long time now, and it's been consistent. It really falls, like it really goes down to just monitor your money, monitor the market. If you have assets in the market, or if you have assets that rely on other things in the market, and if you do, and if you start seeing these moves happening, then you can move your money, pull out, whatever you want to do. It's not going to be a problem. But if you're lazy, if you don't check, if you leave things, just like leave them in your wallet, you don't know what's going on, then you're going to end up losing a lot of money. And that's what happened to Tether and a lot of other companies today, and it's probably going to keep happening this whole week, if not this whole month, if not this whole year. I really hope it gets resolved soon, though. So, any other interesting stablecoin information that you have, Jake?
No, I think you pretty much nailed it. The reasons why you need to use them and know their value. And again, always be watching what's going on in the markets, just like you've seen today, just in case you need to sell some things or move some stuff around or make sure you don't have something in a project that's being affected because nowadays, lots and lots of projects are connected, or as you can see, just when markets move, sort of everything happens at once. So yeah, I think we really just wanted you guys to understand the transition from just regular cash or liquid assets in today's marketplace and compare them to how they work as stable coins today. So yeah, I appreciate your.
Despite all the issues, I still think that stable coins are super, super, super important, and that they have a place in today's world, and that they will make the world a better place for Americans, for people all around the world. And it's going to help humanity move on to better things, because the more liquid value is, the more easily transferable it is, the better. That's the problem that we've been trying to solve for thousands and thousands of years, and now we are at the cusp of actually solving it to a level that we've never really seen before. It would be really interesting to see a stable coin that is pegged to something, and if that something does become unstable, then it switches pegging to something else, like building that into the code. For example, let's say you initially peg it to Bitcoin, but if Bitcoin's price moves too much or goes below a certain amount, then you automatically trade that into another asset and you peg that to another asset. So there's solutions. This is going to be a good learning opportunity for a lot of people in crypto. Let's hope people use it and take it seriously. But besides that, I think that's all I have to say about the topic. I wanted to just give a quick shout out to DeFi Philly. There's going to be a conference at the 8th of July, on the 8th of July. So if you guys want to meet people, if you want to go and learn about tech or get your foot in the door, then make sure you visit defiphilly.io and get your tickets. If you use the code DeFi Friends, then you'll get a 50% off. And just make sure to like, comment, and subscribe. It really helps with the algorithm. That was me. Jake, anything else you want to end on?
No, that's all. DeFi Friend, no S. DeFi Friend is the promo code for your 50% off. You can get your $25 ticket for DeFi Philly. So we'll see you there.
I'll leave it in the description. We'll see you there, guys. This has been DeFi Talks. I'm Sharif, and this is my co-host Jake. We'll see you in the next one. Thanks.